and welcome to the Everyday Pro Investor YouTube series. You got Brian and Evan here this week. We'll go ahead and start off by saying if you like this video, make sure you go down and hit the like button, hit our subscribe button, make sure you get updates. We put out a video at least once a week. So let's start off with talking about the markets. So Evan, pretty rough week, multiple rough days. Again, in the markets. I know last week we said, all right, we think the market's going to pause here a little bit. We think that most of the selling was out. But then we went ahead and had, I believe the NASDAQ was down 4%, pretty rough week. We had a rough week trading. What were your thoughts?
Yeah, I mean, once the sell-off started, there was no stopping it. It went for a couple days. I actually had protection on from a while ago that I expected the spread almost hit. They were way out of the money, and that was on the triple Qs. So definitely saw, like you said, a pause, maybe not a full correction, but I think we got definitely a correction in the tech space. Not sure.
Yeah,
I was gonna say not sure how to play it at the moment. I don't know. I mean, there's not much you could do right now. You kind of have to wait and see what happens with all these tech names.
Yeah, you're almost in no man's land right here because if you buy puts, you're going to pay for them now that the stocks have started to move to the downside. If you try to get long here, it better be a long-term investment. I do know we added a little bit to Apple and Microsoft. I think we started into Apple somewhere around the 114 price range. Probably look to pick up some if it gets a little bit below 110. Microsoft, we were buying at around 203. Which I think we had mentioned that level a couple times, the 205-ish, 203 level. But it's really hard to get long right now, given that tech is still way above its 200-day. I think it's pulled right back to its 50-day on the Qs, but I could see more downside, really. I think that because the NASDAQ is so tech-heavy, and so is the S&P, don't get me wrong, because Apple, Microsoft, Facebook, Amazon, they all are the biggest companies in the S&P as well, but the S&P 500's got a lot more diversification than the NASDAQ. I think that with the S&P being down 7, the NASDAQ's down around 11 or 12, I think that what you need to look for here is just high-quality companies, pick a price point, and go ahead and enter into those names. I think if you can get some cyclical stuff here, that would be good. I know the materials sector actually performed really well this week. That's a sector that I like. But some of the other cyclical sectors that are still underperforming, I think you can get long here and then pick some spots because the fact of the matter is Apple, Microsoft, they're not going anywhere. I like both those names. They both pay a dividend, and they're going to be around and be powerhouses for the next 10 years. So once they get to a price that you like, go ahead and start buying. Don't buy all at once. But wow, was it a rough week, and there's not a whole lot you can say about it outside of it was a really rough week for everybody.
Yeah, and to your point about the puts being expensive too, I mean, if there's names and you got the capital to do it, selling naked puts here is not bad. I mean, you'll bring in a ton of premium, and just make sure you pick a low price point so you don't get, so if you get executed and the sell-off continues, you don't get totally smoked. But as long as it's the names that you like and you're going to pick up anyway, like for instance, I know we're looking at some Apple naked puts around the 85, 90, 100 level. Those are really good price points to us, so we might look at doing some naked puts there.
Yeah, that's a really, really good point. I was just quickly looking at, so this week expiring 100 puts on Apple, traded on Friday. The last trade was at 71 cents, so you could collect $71. I think that's for a 1 week output, that's really nice. That's a 10% or a 12-ish percent pullback almost from where the name's trading now. And I think if it gets through 110, that's the next level. So like I mentioned, we'd pick up some more if it gets maybe to like 109, 109.50. And then I think from there, if it gets meaningfully below 110, so like through 109, I would say the next stop is 100 for Apple. And I like it at that price. And then we even, like you mentioned, like it after that. If it really, really, really collapses, tech space does, it's going to probably 85. And at that point, you've got to load up with everything you got. I'd make it a huge overweight position at that point, probably like 7-8% of the portfolio, because at that level, it's a really, really good buy. I think the other thing we got to talk about, obviously, we just mentioned how the market was really tough this week. But on, was it Monday or Tuesday, we got the Nikola GM news.
It had to have been Tuesday. The market was closed on Monday.
Oh, yeah, good point. I keep forgetting that it was the shortened week there. So Tuesday, we got the news out of, or wait, was the market closed this week or was that last week? Now I'm starting to forget. Yeah, the market was open Monday. Wasn't it? I don't remember when Labor Day was now. Anyways, we got news that Nikola and GM had partnered up, and basically GM was going to be taking on basically the manufacturing services for Nikola, also helping with the engineering side of things. And in return, they get 11% stake in the Nikola company. On the surface, I thought this was a really interesting deal because what is Nikola really offering besides its IP? Not a whole lot. But nevertheless, it kind of legitimized the company, and the stock moved up 25% on the news. GM moved up like 7 or 8%. But then 2 days later, we got word that, I can't remember the name of the firm, but they put out a piece saying that Nikola's a sham and laid out, there was probably 50 different points that they laid out that said, this company is a fraud. And there were some pretty compelling arguments. And then all of a sudden, you've got, there was no immediate response from Nikola. Then you've got their CEO. He's on Instagram. He's, they're coming after me because I'm trying to change the world, this, that. And unfortunately, it sounds really similar to some other instances we've seen where the companies were frauds. What was it? Theranos CEO, when she started getting backed into a corner, she sounded just like this. The CEO of Nikola said that he'd put out a bullet point, response, and his response so far has not been anything really of substance. So we'll see what happens next week. I think I'm sure the lawyers are getting involved. This is going to get really interesting. Obviously, the firm that put out the piece saying they're a fraud is short the name. There's nothing illegal about doing that as long as the things you're saying have supporting evidence and that's not manipulating the stock price. You're just presenting the truth. But if it turns out that some of these things are false, then things get a little bit murky. But I think the easiest thing Nikola could do was just say, hey, here's a truck, here's our IP, here's somebody driving it, have an independent third party come out and go, yes, this is real. We haven't seen anything like that yet. And I don't know. It's really, really interesting.
How does it make GM look in this situation?
If this is to be true, I mean, GM would they would look stupid. I mean, I think Mary Barr is a really good CEO. She's done a great job at GM, but if she's caught going into this deal, and obviously she's to sign off on something like this, she's going to do her diligence, but there's tons of people that work for her that are vetting this and should have. I mean, if this turns out to be true that Nikola's basically a fraud, I don't know how many people are going to get fired. There's going to be a lot because they have a whole team dedicated to mergers and acquisitions and joint ventures. Yeah. I don't know. She would look really bad. It would look terrible for her. Whether she loses her job or not, I don't know. I mean, it's not technically costing them any money. It just looks really bad.
That's the one.
But I'm sure a lot of other people would get fired. There's no doubt about that.
That's like the main thing that's making me think that it's not a fraud, and there's just some funny business going on with this firm that put out that piece. Just because GM, obviously, if they're going to make such an investment, they're going to make sure that it's all the T's are crossed, and I just don't see them investing into a fraudulent company. I don't know.
Yeah, I definitely agree with that. And I think that what we might find out is maybe early on the CEO stretched some things in order to get investor capital. I wouldn't be shocked. I would say it'd probably be in the early stages of Nikola. It's not uncommon for CEOs, inventors to be overzealous and overpromise things. I mean, Elon Musk does it every single, I can't say week, but every 3 to 6 months, Elon promises something that they don't deliver on for the most part. Now, eventually he delivers on it. It's just never on the timing he says. And I could see that being the case here as well. Like I said, I can't imagine GM's getting in bed with a company that's just a flat out pure fraud.
Not to keep staying on the subject, but how does a company recover from something like this? The stock, how does the actual stock, so the stock definitely sell off, broke down. I mean, it's just, I think it's trading around $30 right now. It was at 55-ish at the beginning of the week. I mean, how does it recover from here?
Yeah, so it's actually below where it was before they announced the GM news. I think it was at like 30. It's a few dollars lower, is all I know. Like you said, it popped up to like 55, and that has had a massive sell-off. It's actually below where they announced the GM news. The only way to recover is to come out and refute some of these bullet points and have hard evidence. The PR team needs to get on it. I'm sure they have a PR team that can handle this type of stuff, PR marketing, whatever, to be able to go through and say, look, here's 3 of the 50 bullet points they laid out. These are easy to prove. Let's just go do it. Hey, let's call up GM. Let's have Mary Barra come out and look at our prototype Badger truck and have her, we'll do a press conference. We'll do this. I mean, that's the only way to get around this thing. If they don't act fast, the longer it takes them to respond in a meaningful way, the more likely it is that the stock doesn't recover really quickly at all. Because even if you wait 3 weeks, well, what did you do in those 3 weeks to cover up all those different things, right? And they got to come out next week, and they've got to have something concrete to support that these at least a couple of these bullet points are fraud. It doesn't even have to be all 50, but at least respond to 1 or 2 or 3 of them. So that's the only way to take care of this if you're Nikola. I think we can probably move on from that. It's a really interesting topic. We could spend an hour probably talking about it. But let's go ahead and move on, and let's talk about what we're looking at. I mean, so we had the wing put spread we talked about that, man, if we would have held on to that, we would have made more money. It looked like the chart was going to hold up, and it ended up rolling over. I think it closed like 130. We didn't have too many short-sided plays going for the market to pull back, so we had a rough week. We thought that tech was going to bounce. It didn't really bounce. But looking at what's performed well, we talked about the chemical space. I know we've played the materials sector, the XLB, to success, and I kind of want to go back into that theme. And I was looking at Dow Chemical, Dow Inc., which has performed really well off of its lows. I forget how low it got. It got probably around $30, but it's now pushing up against 50. I was looking at that chart, and I think it's kind of set up for a breakout. I think it could get even up to 55 potentially. Evan, you want to talk about the couple of ways that we're looking at potentially playing this name?
Yeah, so we got the Dow 10, 16, 50, 55 call spread. They're going for about $1.80 right now. We're also taking a look at just buying the straight up Dow 55 calls for about just under 60 cents. So those are the 2 ways that we're looking at it. Obviously, buying straight up calls, you have more upside. And buying the spread, you have less upside, but still pretty good margin. $1.80, max profits $5. That's right in the range that we typically look for. So I could see both being pretty good options for us.
Yeah, I think we haven't decided which way we're going to play this yet. That's why we're putting both those out there. I think that the problem with the 55 calls that we haven't pulled the trigger on just going with straight calls, which is what we like to do more than spreads, is that that's a 10% move from 50 to 55 in a matter of 1 month, basically, which can be done, absolutely. But when you look at the charts, if it gets through 50, which is kind of a resistance level, 52.50 is the next stop, and then 55. If you put the spread on, and it starts to move through, and you get to that 52.50, you're going to be profitable. And then it'll allow you to decide whether you want to take your profits or you want to push the upside. The thing is, if it gets to 55, let's say in 3 weeks, and the option expires in 4, that option's probably not going to be worth a whole lot, and you're already paying 57 cents for it. So I'm leaning towards the spread, but I'm not decided yet. Probably see how it opens on Monday and then kind of work from there.
And then our last segment, we wanted to cover real quick. You've heard us talk about gold, but it's silver. It's similar to gold. It just looks like it's poised to start moving higher again. The chart's looking really good for us, so we're looking at the silver 10, 16, 27 calls. They're going for about 62 cents right now, so that's really how we're looking to play gold this week.
Yeah, so if you watch our previous videos, we've talked about gold, we've talked about silver. We hit those trades early on. We didn't maximize the profits on them, but we made really good money on both gold and silver previously. Basically, we called the breakout before the breakout happened. Well, now we're looking at these charts. They've consolidated, and we think they're poised to move higher again. You look at the macro environment, it's really set up strongly for gold. And I think silver, you're seeing different parts of the world start to recover. Commodity prices have really shot up everywhere. Even lumber at one point was trading at like $900. It's since pulled back, but copper's strong. Silver and copper both have economic growth elements to them, and I think that as the economies recover globally and we start to grow, silver can still move higher. And both the silver and gold charts are setting up kind of a pendant type chart pattern, and I think you're going to see it break that pendant upward here in the next week, and then it'll head higher. And I think the 10-16 is the right date to play it, so I really like that 27 call that you mentioned, Evan. Anything else you want to add for this week?
Well, I know we put on some protection on the market just in case it does continue to move lower, which you could see. Look.
Yeah, and that's a good point. I forgot to mention that. And just to highlight, we put on a put spread that expires this week. I think it was the 329 SPY put spread, because we do think the market could potentially move lower overall due to tech, but it's a hedge, so it's not a huge part of our portfolio. I think what was it, about 0.5% of our portfolio is in this hedge, and it's just to offer a little bit of cushion in case the market does move lower. That 333 level is pretty key technical level, and if you were to get a close below there, you're definitely going to probably trade down, maybe even through that 329 level on the SPY.
That's really all I had to add.
Okay. I don't have anything else either. We do appreciate everybody listening. If you're on the podcast, if you're watching us on YouTube, we appreciate you watching. Go ahead and subscribe, hit the like button, follow us on Instagram and Twitter. And if you haven't already, go check out our everydayproinvestor.com. We've got a subscription service there. You can trade with us in real time. We do talk about a lot of the trades here on the YouTube series, but those are usually talking about them in the past. If you want to trade in real time and get the same returns that we get, go sign up for that service, and let's go out there and let's have a good week.